sessions I sent earlier, lesson 1 and lesson 2, some of those things were mentioned, some of those applications were mentioned. So I'm going to be showing you now and then telling you what they are for and how important they are to your trading journey. Right? Some of these tools you're going to be using them for a very, very, very long time. I mean, without them, you can't even place trades. Without them, you can't access the market. So without wasting any more time, let me just share my screen. Let me share my screen and we'll start the class. All right. So this was our last class. This was what we discussed in the last live session. All right. So this was what we discussed in the last live session. All right. And I'm just going to be showing you a few more tools that we'll be using in the trading view. Right. So this is trading view. I think what we'll just do, if there's time, if I have enough time, probably do a breakdown tutorial on all of these tools again. But that's a question of time, right? But if not, probably I'll just send a tutorial that explains it in detail. So I think we stopped at the where did we stop now? Okay, we stopped at the fib retracement tool. Yeah, fib retracement tool. And like I said, many of these tools, you might not need everything at least for a start. Over time, when you get familiar with the market, when you get familiar with the interface, you get to explore some of those things too by yourself. Like I said, I'll only be showing you some of the tools that I've been using and I'm familiar with, right? There are a million and one tools there, and you would definitely not be using everything. I don't think I've even used up to 20% of the tools here. All right. So, like I said, I'm going to be showing you the ones that I use on a daily basis. So, we talked about the fib retracement tool. That's why I was explaining the different levels. So, if you have a downtrend and an uptrend like this was the fib retracement tool. If you remember from the last class, and I said we look at these levels where price are likely to reverse or price are likely to change direction. This, for instance, this is a very long pullback, this particular line. And then these levels are possible areas where price can reverse. And we talked about that price reversed on the 0.618 level on this particular trade or this particular trend. And then, of course, you can see it continued to the downside. Can you see that pullback to the downside? All right. So that's that for the fib retracement tool. The next one I'm going to be showing you is the long short position. This one, you're going to be using it I mean, you're going to be using it a lot. The long short position. What that means is normally we know that when we are entering a trade, we want to, we are going to be risking, right? We're going to be risking a percentage of our capital. So say for instance, you have $100 capital before, or let me say 1,000. Okay, let's do 1,000. You have $1,000 capital. If you want to enter a trade in the market, you would need to risk a part of this capital as your stake on that market or as your risk on that particular trade. And then you are risking that trade in order to get a particular percentage from the market, right? And if the market does not go your way, you'll be losing that percentage. So say for instance, we want to risk 2%. And of course, you have to be very good with your maths. You have to be very, very good with your maths when it comes to the Forex market. So let's say we are risking 2%. 2% of this trade. 2% of $1,000 is how much? Can I get a feedback? Are we together here? Hello, can anyone hear me?
That's $200.
Okay. 2% of $1,000. Are you sure that's correct? $200 is 20%, not 2%. So 2% is going to be $20. All right. Now, like I said, you have to be very, very vast and very fast with your calculations because you're going to be doing a lot of that in this market. So 10% is what? $100. 10% is $100. 20% is $200. 2% is $20. So that means if I risk $20 on this particular trade, so say for instance, I've already analyzed the market and I'm selling the market that okay, the market is going to go from this particular point to this particular point. All right. I believe you can see my screen. Now, how I'm going to measure my risk is this. I'm coming back to this tool. So I'm going to use the long position to mark out my entry. So say for instance, I am entering the trade at this level. I'm entering the trade at this level, for instance. So this is my entry. I'm going to set my red zone. The red zone is how much you are risking, particularly if you are buying, if it's on the buy trend, the red zone is how much you are risking. And the green zone is how much you are, I mean, you are likely to make if market goes in your direction. So it's a risk to reward ratio. That's why we call it a ratio. If you're trading the Forex market, if you are, say for instance, I'm giving 2%, I'm risking 2% on this trade. I'm expected to make I'm expected to make 6% if that's a 1 to 3 risk to reward, right? If it's a 1 to 10, if it's a 1 to 5 risk reward, I'm expected to make 10% on that trade. Are we together now? So that means if I'm risking $20 on this trade, right? If I'm risking $20 on this trade, I'm expected to make how much now? Can anybody tell me? If I'm doing a 1 to 5 risk to reward, I'm expected to make how much? I'm not hearing anybody. Are we together?
Yes, sir. We are with you. I'm trying to.
But you're not
I'm trying to.
responding. You're calculating. Okay. Because I need us to be together and I need responses when I ask questions so that I know we are together. That's how I'm sure that you are getting it. So I'm not talking to myself alone. So I'm risking 2% on this trade and I'm making a 1 to 5 risk to reward. That's 1 ratio 5. That means I'm expected to make 10%. So that means my 2% is $20 of $1,000. And then I'm expected to make $100 on $1,000. That's how we go about the Forex market. You have a particular risk and then how much you're expected to make. So this particular trade, you will see, I want to zoom in so that I can see it clearly. You can see a risk to reward here on my screen. Risk slash reward ratio is 2 point, I think this is 2.91, right? So let me increase it and make it 3. Let me see. Okay, this is already 3. Okay, this is 3. Very well. So if you look at this particular risk to reward, I'm trying to zoom this in so that you see it clearly. You can also try it on your laptop after the class. So you can see a risk slash reward ratio is 3.13. That means if I'm risking 2% on this trade, for instance, I'm going to be making how much now? 6% on that trade. Are we together? Let me get my brush tool. So if I'm risking 2% on this trade, I'm expected to make how much? 6% on this trade. So you can see that the green side, sorry, you can see that the green side is actually bigger than the red side. That is if you are buying. Remember, we said if you are going long, the first lesson, either you are buying or you are going long, right? That is when you are going in that upward direction. Whereas if you are selling and you are coming down, you are going in the downward direction. And there's another one for that. That is the short position. The short position is the inverse of long, right? So if you are going long, it is buy. If you are going short, it is sell, right? So if you want to click on the short position now, you can see that the red is above and the green is below, meaning that, let me find the short position on the chart for you. I'm just showing you how these tools work. So I'm looking for a downtrend. Let me come here. Now this is, so say for instance, my analysis. Remember, I'm saying I'm emphasis on analysis. Once your analysis has shown you that okay, market is likely to reverse. We are going to get into analysis later on. All right, market is going to reverse. How do I measure my risk and my reward? All right, so this is it. You are going to be using, if it is going down, just like the yellow line is going down, you are going to be using the short position to mark out that. So the short position here, and then the green showing that if you are risking 1% here and you are making 3% here, that means your risk to reward is 1 to 3, right? And if your risk to reward is more than that, let me drag this green part. So the longer the part, you will see the ratio here. This is 1 to 4.13. If you drag it longer, 1 to 5. This is 1 to 5.17, meaning that if market was to start from here, if the market was to start from this point and then it trades down, it does a up down movement, up down, up down, up down, up down, up, and it clears this point where I said the market is going to stop. That means that I'm going to be, once I risk my 1%, I'm going to be making 5% on that trade. Or once I risk 2%, I'm going to be making how much now? 10% on that trade. Once I'm risking 3%, I'm going to be making 15% on that trade, because this is a 1 to 5 risk to reward ratio. And it is very important, because if you are going to be profitable in the trading space, you must be making more than you are risking. I'll say that again. If you are going to be profitable in the Forex space, you must set, or you must determine to make more than you are risking. Are we together?
Yes, sir.
All right, all right. So if I'm risking one, I'm expecting to make at least two, right? Because that's how I can stay profitable in the market. All right. So that being said, that's just to show you how this tool works. That's the long and short position. That's what you're going to be using it for, to mark out your trade. Let me show you what it looks like in real time. Let me show you one of my analysis. GBP USD. 1 minute. GBP USD. Give it a minute to load. Looking on my network. All right. So this is how what it looks like in real time. So you can see this is one of my analyses from last week. And I said I'm going to risk 1% to make 3%. And you can see that when markets got to this line, it triggered me into the trade. When it got to that line, it triggered me into the trade. But fortunately, markets did not get to the bottom of the red line. I would have lost that trade. All right. So markets came in, did his whole zigzag movement, and then market went to take out my take profit right here. So that means I risked 1% to make 3% on that trade. So if I was risking $10, I was making $30. If I was risking $50, I was making $150. That makes sense, all right? So that's how that particular tool works, to mark out your risk to reward, where you're going to be entering the trade, where the trade should take you out if it does not go your way, which is this bottom. This is the bottom of this red line. Is someone saying something? I didn't hear that.
I can't see what
Sorry, I can't hear you.
I said I can't see the screen. I can't see the screen anymore.
Oh, okay, okay. Can you see now?
No, it's still not showing.
Is any other person having that issue? Is any other person? Can you please respond?
I can see it now.
Okay.
I can see the screen.
Okay.
Wow. Can you hear me?
So yes, you can.
Okay. Okay. All right. I've actually been speaking. I don't know. Something is wrong with
Or
with
probably
my.
your mic was muted.
Yeah, I actually
Probably your mic
unmuted.
was. Oh, really? Maybe the problem network.
Yeah.
I don't know. There's a lot of glitch tonight.
Something.
But
So
that's that for. Okay. Okay. Go ahead.
while you were showing the risk ratio, the risk reward
Yes.
ratio, I saw 3 points. I mean, I didn't see the other place where the one ratio, when you got the exact ratio from.
Sorry, I didn't get.
Or
Can you come again, please?
okay, so can you go to the green area? Can you go to the green area so that you can pop up that information?
Here, right?
Yeah, exactly. Yeah, let it pop up.
Okay.
That that's long. Okay, so I can
Yeah.
see what I can see here is 3.13. So where is the 1:2 or 1:3? Sorry.
All right. So the 1:3 is when you see 3.13, it's telling you that you are risking one to make three. That's why the three is there. So if I'm to increase this green target, you see that the number has changed from 3 to 5,
That's 1 to 5, yeah.
ratio 5 exactly. If I increase
Okay.
it longer, can you see 1 to 6?
Okay.
Exactly.
And if,
So the longer your target, the more the risk to reward. Whereas if I'm to also increase the red line, can you see that it is reducing?
I can't see the what I'm saying. Okay, okay, so it's reducing on that other side. So right now it is
Yes,
1:2, right?
yes, yes. So
Close
the
to-
one is actually the red. So the
Okay, so
red
I mean it's not
against the
necessarily
green.
showing. It's just the other place whenever I extend either the green or the red.
Yes, yes,
Okay, got it, got it.
yes. All right. So that's for the long and short position. The next one I'm going to be teaching you is the brush. Of course, brush is just for annotations on the chart. You want to write something on your chart, you want to explain something, that's what brush is for. And then the highlighter, similar to that. You want to highlight some parts. So if you remember the last class, I was showing how to measure, how to show like the up and down movement or the zigzag movement rather. So you can use the highlighter to show that somebody's mic is on. Please mute your mic. I'm getting feedback. So you can use the highlighter to show that movement like this, up down movement to the upside. So that's what the highlighter is for. So more of annotation. Same thing with the arrow marker, arrowhead. You're going to show the arrow. So if you want to show an arrow that okay, market is going up, this is it. You can indicate market is going up, or you want to show that market is coming down, you drag it down in the opposite direction. I believe that's clear. So those are like annotation. This particular tool is mostly for annotation, this particular segment. The other one is also arrow to indicate or to point somewhere. You want to point to this spot. Let me do that again. Arrow to point to this level, or you want to point to another level like this. That's what the arrow is for. And you'll be needing some of these annotations. Maybe you're explaining or marking up your charts or analyzing your charts. You'll be using a lot of these annotations. Same thing with this one, arrow markup to show that okay, market is going up. Arrow mark down, market is going down. So this is a downtrend, this is an uptrend. Different indications that you might want to use on your chart. Rectangle to mark out a rectangle portion on your trade. I'm still going to explain how all of these things come together. Let me just show you how they work. Right. Then this other rectangle is an rectangle in a particular direction. So if I wanted to show a rectangle like this, let me pick it up again. Exactly. A rectangle in an inclined direction. That's what that particular tool is for. Right. The next one is path. You'll be using this path a lot to show the trend. Like I said, market moves in upward or downward directions or sideways. So you'll be using this path direction. Once you click on it, you move it up, you click on it, you move it down, you click on it. So this is an upward trend. All right, click on it, click on it, click on it, click on it. So you are done. And once you are done, you press escape, and then that's how to draw your path. And you can draw a path along a particular market chart. Right. Say for instance, I want to draw a path here now. I start from here. This is a path, another path, right? Here, 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 following the market's pattern that the market is forming. So that is how to mark out paths on the chart. Okay, if you have questions, please let me know. Then we have circle, of course. You know what circle is for. You want to indicate or mark out a particular area. You can draw circles around it. Big circles, small circles, depending on how big you want the circle to be. So you can draw circle on your chart. The next one, ellipse. Once you mark out the ratio or the diameter of your ellipse, you can draw that on your chart. Right, ellipse. These are just markings, annotations on the chart. Next one we have is polyline. All right, you want to draw a polyline around, is a continuous line that never ends until you press escape. So this is a polyline. There's a continuous line that will keep connecting itself until you press escape. Same thing with triangle. Once you pick your lines, you can draw your triangle, any sides or any kind of triangle, however you want it to be, because these things you are going to be using it to mark out. Like I said, one of the very first things about trading is able to mark out your analysis, right? You're able to analyze the market, and these are the tools that you'll be using to analyze the market. All right. Then the arc, you can have this is an arc, right? To analyze the market as well, to mark out things on the market. Curve, 2 points, and then you can adjust the different sides or the different points on the curve to also mark out on your chart. What's the next one? Double curve. This is what a double curve looks like. 1.1 and then 0.2. Like I said, you might not be using all of these tools, but just showing you what they look like and how to use them. So let me just press undo so I can clear the chart a bit. All right. So the next one I'm going to be looking at is the text. Text, of course, you know that I've been writing with text all along. So you click on your T and you press it, and then you can type anything. Market structure. All right, market structure. So that's how you to type on the chart. Once you click on the T, you put it there, and then you type in what you want. Right. There are different kind of text as well. Anchor text, similar to just text, but just a little bit smaller. Notes. So you want to pick a note. I want to point to a particular place on the chart. So let me say I want to make a note around this particular area. Maybe something is happening. The US dollar is about, you just want to mark out that place. So I can just pick this point and then write something about it, make comments. All right. So let me show you what notes how it will come in handy. Can you see what happened there? So this is part of my analysis, and I made notes about that particular point because something actually happened at that level. Right. So that is how that's going to come in handy. You want to make notes and write some things that you can come back to whenever you come back to the chart to give you an idea of what happened at that particular point. So that's that for notes. Let's keep going. Paint tables. You want to make a table on your chart. Maybe you are trying to compare different parts of the chart. Don't mind, I'm just typing gibberish, right? Just to show you what it looks like. So different parts. Like I said, this particular trading view is where you do everything analysis and you see it in real time, right? Everything analysis on the chart. What's the next one? Call out. Call out is similar to note, where you just have a point pointing to a particular area, and then you can make comments on that area. All right, you can make comments on that area. That's a call out. And signpost. I'm not sure I've used that before, but let me see what it does. Signpost. Okay, so it's just like a marking as well, where you can put in your text on a particular area. All right, on a particular area. And then we have a flag marks. So flag marks is if you want to indicate whether your trade was a win or a loss. So say for instance, I entered this trade. If I wanted to use flag marks on this trade, I'm just going to come here, flag mask, and then I'll tell it. So anytime I see a green flag, I know that that trade was a winning trade. All right. And you can also change the color to red. And then I know that, okay, that trade was a losing trade, right? So that's what flag mask is for. The next level is emojis, right? Of course, we know what emojis is or are. They are, I mean, I don't know what to explain it, but I believe everybody chats every other day, so we know what they are for. So if you want to add emojis to your chat as well, I mean, I've never used emojis on my chat, but if you feel you want to, that's also how you use them. So just click it and apply it to your chat. If you probably, I don't know, I've never used it, so it's funny that I'm talking about it. But yeah, that's that for emojis. All right, the next one I want to talk about is the measure. So we know that for every movement on the chart, there is actually a measurement or a measured meter, because you will see a scale on this right hand side. Can you see 23514, 3512, 3510, 3509? So there's actually a measurement scale, and this ruler makes it easy. So if I want to measure from here, from this red candle to where the line is, so let's read what that is saying. It's telling us that we have 8 bars, 8 2-hour bars. Okay, 7 now. We have, okay, now 3 bars. Volume is 78.0K, right? And we have 1935. I believe, I'm not sure if you can see it clearly. Can we all see it clearly? Is it bold enough?
Yeah,
Yes,
yes,
we
we
can
can
see
see
it
it
now.
now.
All right. So what we just did was we measured from the red line to where that line is, both vertically and horizontally, right? So we are seeing 1954, 3 bars, 45 minutes. Volume is 78.02K, right? So that's what measurement is for. I'm still going to get into details later on of what all of those measurements are about. But just what to show you what ruler is or ruler does is that you can take measurements of different, both vertical and horizontally. You can see what is happening in the market at every point in time. The next one is the zoom. The zoom is that, maybe say for instance, I let me zoom out for a minute. I want to show you what the zoom is for. I want to show you what the zoom is for. So so say for instance, I want to zoom in into this area, this particular part where my cursor is. I want to see what is going on at that particular place. I'll just click on zoom and draw a box, hold it down and draw a box over it. Automatically it's going to zoom in for me, and I can see what is happening. I mean, it makes it bolder for me to see exactly what is happening there. So if I want to mark my chart, I can do, you know, like that to see how market is moving in that direction. I believe we are together. So the same thing for zooming out too. Once you click on zoom out, it takes you back to where you were before. If you click on zoom again, draw a box on any area you want to see clearly, it zooms in for you and you can see it clearly. Okay. So the next one I want to talk about, let me see if there's anyone I want to address again. Okay, let's talk about this hide local drawings. Local drawings means that if I click on it, I won't be able to delete anything I've drawn on this chart. So it's going to lock temporarily. So if I click on it, lock, I won't be able to move any of it or delete anything. Everything I've written is going to be there. It's locked already. Until I unlock it, now I can now move them around or delete them. Right. So that's what lock is for. You click on lock, you're not able to move anything or delete anything from the chart. But until you off it, then you can now move it around. Then the next one is hide. You want to hide all the drawings. Can you see? Everything is gone. You want to hide all the drawings. If I toggle it again, they are back. Right. So we have three functions there. We have the hide drawings, hide indicators, and what's the third one? Hide positions and order. And the fourth one, hide everything. So if you want to hide drawings, you click on hide drawings rather. If you want to hide indicators, you click on hide indicators. If you want to hide positions, you click on hide positions. If you want to hide everything, everything is out of sight. So you can see your chart clearly, right? So if I come to my chart, for instance, you can see all of the markings I have on it, everything from how many weeks ago. If I want to hide everything, I'll just come here, hide drawings. Can you see everything is gone? Now I can see clearly, right? And if I want to bring it back, I can just toggle it off again, and then I can see everything I have on my chart. For the delete button, if you want to delete it, remove 140 drawings. So it's telling you that you have 140 drawings on this particular chart. If I remove them, it goes permanently. Remember, hide is to do it temporarily, right? Hide, I can take it off and then bring it back. For delete, once I do remove 140 drawings, everything is gone permanently. Everything is gone permanently. So it depends on what you want to do per time. So that's that for the toolbox section that you're going to be using. Now let's go to the upper bar section here. I believe I already explained how to log in, create an account, and do all of that. Now to the upper bar section, this is where you're going to be searching for your assets. Any assets you are looking to trade. Remember, we have major pairs, minor pairs, exotic pairs, and all of that. This is where you search for anything you're looking for. So you want to search for Bitcoin, for instance. I just Bitcoin against the dollar, right? I'll just click on it, or just Bitcoin. Let me just do Bitcoin. Now, this is the Bitcoin chart currently. This is the Bitcoin chart. If I want to search for Ethereum USD, Ethereum, I'll click on it. This is what I have on Ethereum. Ethereum is actually selling. There's a very massive drop on Ethereum currently. Now, if you want to search for any of your major pairs, so say for instance you want to trade GBP USD, just need to type it. Once you click on this first icon here that has the search button in front of it, once you click on it, you see just type what you're looking for. GBP USD. You are going to see a lot of GBP USD variations. Now, these parts that you have in front of them, these are different markets or different companies listing of the GBP USD. So GBP USD CMC markets. So this is their own chart because there are different companies that list GBP USD on this TradingView, right? FX, this is their own chart. Wando, this is their chart. Forex.com, this is their chart. Pepperstone, this is their chart. Capital.com. So you just need to pick one that is reliable. Personally, for me, I use Wando to check charts because some of the other charts can be irregular or misleading, right? Some of them have track records of irregular, misleading charts, right? So you want to use the one that's been tested, trusted. You can use forex.com or Oando or CMC markets. You can see CMC markets is the one leading the chart. So any of those three charts, you are good and you are safe, right? So let me just do Oando, and then you can see it's going to load up the GBP USD chart for me. Because I already saved my markings on it, that's why it's still bringing it. Let me just hide it, and then you don't see anything on that, right? If I want to search for gold, so GOLD, gold, I'm going to see different companies listing gold on this chart. So I just click on, capital market, for instance, or CMC market. Let me just do capital.com, and then I'm going to see my gold chart right here on right here on the chart. All right. So that's that. That's how to search for anything you're looking for, really. Any assets that you want to trade. If you want to trade silver, once you type silver, you're going to see the silver, the silver chart. Click on one, and then you're going to see what silver is saying currently. That's why I said TradingView is house for every asset that you can ever think of. It's house to every asset that you can ever think of trading, right? That's why it's a very, very, is a go-to platform to see market price actions in real time or market movements in real time. Are we together now? Now, the next part here is what we call time frame, right? What we call time frame. Let me type that out. Time frame. Time frame is very important in trading because we want to see what market is doing per time. You can see what market is doing every 5 minutes. You can see what market is doing every 10 minutes. You can see what market is doing every 15 minutes. You can see what market is doing every 30 minutes, every 1 hour, every day, every month, every week, right? Depending on what you want, what you are looking for. That is what this time frame is all about. So if I want to see what market is doing 1 minute, every minute, it's going to be a lot of data, right? It's going to be a lot of data. It's going to zoom in a lot of data for you. So you can see here that every candle here. Are we still together, please? Okay.
Yes.
Yes, sir.
All right.
Yes, sir.
Let me quickly take the attendance before I forget. All right. So back to what I was saying. Every candle here is a 1 minute candle, meaning that their action is happening every minute. After a minute, now you see that the candle is going to close and print another candle, showing the direction of what market is doing in real time. Are we together now? Yeah. So if I want to see what market is doing in 3 minutes, I'll just click on the 3 minute time frame. It's going to be a lot more condensed because it's going to take three 1 minute candle and merge it into one. So it's going to summarize 1 minute candle, three of it, bring it together into one. 5 minute candle is going to take five 1 minute candle and summarize everything into one. Right? Same thing for 15 minutes. 15 1 minute candle or three 5 minute candle, add it together, make it one. Right? Why it is important is that 1 minute can be a lot of candles and a lot of data, which can be misleading too, because you would not exactly know where market is going. Because if market is printing 1 minute, it can be very confusing if you are not careful. That's why we like to look at higher time frames to see what market is doing over time. So there's 1 hour candle. 1 hour candle means that every 1 hour, this is what the market is doing. This is what the market did in the last hour. This is what the market did in the last hour. This is another what the market did in the last hour. You can see. So it is crystal clear here. You can see it a lot, you know, is a lot better here to summarize what the market is doing. If I break this 1 hour down into 1 minute, it's going to be how many candles now? That will be 60 1 minute candles to make a 1 hour candle. I believe I'm not confusing anybody. Are you following me, please? I'm trying to break it down as much as I can so that we can get it right. So 1 hour candle, these are 1 hour candles. If I go to the upper one, 2 hour candles. So every candle is 2 hours. So it took what it means is that it takes 2 hours for one of these candles to form on the 2 hour time frame. Right. If I go up, this is 4 hour candle. It takes 4 hours for one candle to form on the 4 hour time frame compared to the 1 minute. Can you see that the candles are getting smaller and reduced? They're getting reduced, right? Because it's taking longer time for one candle to form on the higher time frames. If I go to daily, it took a day for one candle, this candle to form. It took a day for this candle to form. It took a day for this candle to form. If I go to weekly, it took a week. Can you see that it has merged the daily into one now? It took a week for this candle to form. It took another week for this candle to form. Are we together? If I go to monthly, it took a month for this candle to form. And why it is good to understand time frame is that you want to see where the market is going overall on higher time frames. so that you can now scale down to lower time frames to enter to find a specific entry for your trade. Are we together? So if I know that, okay, say for instance now on silver, it's looking like market is rallying up to the upside from what we can see here, right? See, from what we can see here, let me use my brush. You can see the market is going on a uptrend. So market is really going long, is buying massively on silver, right? So now that I know the market is buying like mad on silver, right? I want to go to the lower time frame and now look for where I can join in the buy. Are we together now? I can't just enter a buy on the monthly time frame. I'm going to be risking a lot of money, right? Because I don't even know where the market has bought, where is it going to come down to. But if I scale down to say a 5 minute time frame now, so this is what a 5 minute time frame of that same chart looks like, right? So now here I'm able to find a specific entry where I can join in that buy movement. So say for instance, maybe I joined the buy at this level, I would have gotten some profits to the upside here. Are we getting it now? Say for instance, I joined the buy at this level based on my analysis. Say I joined the buy at this level. See how much I would have made. I would have made this level of movement to the upside. I would have made that much. I would have made that much money to the upside. Are we together? So that is why it's important to understand time frame. The higher the time frame, the more clear the movement of the market, right? So you can see that when we checked monthly, we're able to decide, or we're able to come to a conclusion that okay, market is actually buying, and then we went to this lower time frame to join in that buy, because it's important that you join in the trend of the overall. I mean, you don't want to be trading against the trend. If market is buying and you are selling, you are bound to lose money. You are going to lose a lot of money. So once you know where the market is going, just go to the lower time frame and find a place where you can join in that buy movement. That being said, um, so that's that about we talked about here where you can search for different assets, and here where you can check out for different time frames, higher time frame to the lower time frame, from the monthly to the 1 minute, right? This particular part is where we have different candle formations. The next one here. Now, like I said, what we have here is a candle, right? What we have here is a candle. When we look at the Forex market, you notice that we mostly trade, particularly we retail traders, that we don't have a lot of money. We don't have billions of dollars that we are trading. We want to analyze the market with candles, right? But candle is not the only one, it's not the only way to look at the chart. If you click on this part here, you can see bars. This is another way to look at the chart. For some institutional traders, those are the big banks, the hedge funds. These are the ways they look at the chart. This is one way they look at the chart. They look at the chart with bars, right? Another one you can look at is looking at the chart with lines. Are we together? Looking at the charts with lines. All right. So I believe most of you must have seen this before. So instead of candles, we are just seeing lines on the movement, on the chart movement, where market is going up. With this line now, we can know that okay, market is actually going on a uptrend. And you see, with that line, these are other options for institutional traders, how they look at the market. And there are a lot more options. You can see the line with markers, step line, area. This is area, right? This is area. This is another way they look at the chart. But for retail traders, we majorly just use the candlesticks, because we are going to be analyzing with the candlesticks. For hedge funds, institutional traders, proprietary firms, they use other forms of, because they have big monies to throw around, so they use other forms of charts representation to look at the chart and enter the chart. Are we together now? Or enter their trades. But for us, we are going to be using this candlesticks. This is a candle, right? I believe we used candle when we were younger. This is a candlestick. This is a candlestick. This is a candlestick. This is a candlestick. Each formation is a candlestick. The red candle is showing that market is selling. There are sellers in the market. The green is showing that market is buying. they are buyers in the market. It's that simple. All right. So we have the red candle and the green candle. And like I said, market only moves in three directions. You're going up, is going up, or is going down, or is going sideways. But whichever way is going to be showing red and green candles. Red to the downside, green to the upside. I believe that's clear. I believe we are clear on that so far. Now I want to explain any questions so far. Let me be sure we're on the same page. Any questions so far? Hello?
So, sir, concerning the time frame, which time frame do you
Yes.
suggest? Is it a 5 minutes or depending on the market?
So, okay, that's a very, very good question. That's a very good question. So, for time frames, like I said, all of the time frames are important. All right. All of the time frames are important because if they are not important, they won't add it. Right. But for you as a trader, you want to know where the market is going. Right. And to be very clear on where the market is going, you are going to be using the higher time frame from the daily time frame to the 4 hour time frame. You want to see, okay, where is the overall trend of the market? Let's use gold, for instance, XAU USD, right? You ask yourself, where is the market going? Because the higher time frame will give you a very clear direction without any manipulation. So, see, for instance, now this is a daily time frame, meaning that it took a day for every candle to form. It took 1 day, 24 hours for each of these candles to form. So, with this candle now, I can tell you that market is actually on a uptrend. Can you see for yourself? Market is actually on a uptrend. Do you understand? Now that I know that market is on that uptrend, am I going to enter my trade on daily? Definitely not. Now I will now scale down to lower time frames to find a perfect entry for my trade. Are we together?
Yes, sir.
Yeah. So let me scale down to, let me unlock this. Now let me scale down to maybe 15 minutes. As I said, all of the time frames are important, right? If I scale down to 15 minutes, now this entry that I took the market here from here rather. I took the market from here to this point. Now, this entry that I took, it is because I know that the market is what now? The market is on a buy trend. Remember, we've seen that one on a daily time frame. So when I scale down to the 15 minutes time frame, I'll be able to find a very sweet entry to join in that buy. This particular entry now, I won't be able to see it on the daily time frame because let me zoom into daily time frame and tell you and show you again. I won't be able to see that particular entry on a daily time frame because everything is summarized, right? It takes 24 hours to form a candle. So imagine I want to take a trade in 24 hours. That means maybe I will take the trade from, say for instance, now this is a 24-hour candle. If I want to enter a trade on a particular day, it means I'll have to enter the trade from a part of the candle to another part of the candle. Do you understand? Because it takes 24 hours a day to form this candle. So I have to scale down to lower time frames to find suitable entries to join in that upward movement. And that is why you have lower time frames from 15 minutes to 5 minutes to 3 minutes to 1 minute. So this is okay. Let me just type it out. Let me explain this once and for all. Category for higher time frames, right? When we say higher time frames, this is what we're talking about. Higher time frames, they have categories depending on your trading style. 1 hour is higher time frame, 4 hours is higher time frame, 2 hours. Okay, let me do 2 hours. 2 hours higher time frame, 4 hours higher time frame, daily is higher time frame, monthly is also higher time frame. Are we together now? Now for the lower time frames, we have, let me just clone this. For the lower time frames, we have 1 minute, 3 minutes, 5 minutes, 15 minutes, 30 minutes. Are we together? So if I look at the overall trend of the market on a 1 hour time frame, I will have to come down to one of these lower time frames to enter the trade or to find a suitable entry. Are we together? If I look at 2 hours time frame to know where the market is doing overall, summarized data for the for the market at that particular time, I would have to come down to one of these lower time frames to find a suitable entry for my trade, because I would not necessarily want to enter on a 2 hour time frame. Is it possible to find trades on a 1 hour or 2 hours? Definitely, right? But it depends on the kind of trading style that you have, you know. And let me also explain that we have, just follow me, right? We have three types of traders. We have the scalpers, we have the day traders, and we have the swing traders. Now, I'll explain the difference between these three kind of traders. The scalpers are people that trade 1 minute, 3 minutes charts. Their goal as a trader is just they want to enter the trade and get out of the trade in the next 5 minutes, in the next 3 minutes, in the next 10 minutes. Right. So they find a suitable entry, and in the next 10 minutes, they want to have taken their profits. So they are very, very swift, fast traders. No time, they don't waste time. They find a suitable entry, they enter the trade, they put in their risk, they put in their reward. In 5 minutes, in 10 minutes, they're out of the trade. Right? These are the kind of traders we call scalpers. So, say for instance, let me scale down to a 1 minute chart. Now, a scalper would enter from here in 1 minute. A scalper will enter from here and tell you and come out and get out here. Now, if I'm to evaluate what happened here, this is how many minutes? 1, 2, 3, 4. This is 4 minutes of trading. Are we together now? Remember, we're on a 1 minute chart, right? So every candle is 1 minute. So this is what? 4 minutes of trading. And they have taken profit. They are already in profit, right? So they don't waste time at all. Those are scalpers, right? Now, for the other ones, we have day traders. Day traders, they take a bit more time. So day traders will be trading mostly in the 15 minutes or in the 5 minutes candles. Meaning that if they enter a particular trade, say for instance, they enter a trade here. Where's my highlighter? They enter a trade here. Are we together now? And they tell the trade, okay, once you get to this point, I'll take profit at this level. Now, this is how many minutes? 15 minutes, 30 minutes, 45 minutes. Remember, we're on a 15 minutes time frame, right? So every candle here is 15 minutes. So 15 minutes, 30 minutes, 45 minutes, 1 hour, 1 hour 15, 1 hour 30, 1 hour 45 minutes. So it took 1 hour 45 minutes to enter this trade and hit take profit. 1 hour 45 minutes to enter this trade and take profit. Now, what's the difference between the scalper and the trader? They are both trading the market, the same market. Just that scalpers are very impatient people. They enter at a very particular position and they get out quick. No time, quick, fast. They're out of the trade, right? But day traders, they take their time, a bit of time to enter maybe at a particular level. Sometimes it takes hours, sometimes it takes 5 hours, 4 hours, 2 hours, like this one now, 1 hour 45 minutes to go to their destination, right? Now, for swing traders, those ones are the ones that now take trades on the higher time frame. So a swing trader can take trades on 4 hours and tell the trade, okay, enter here, enter at this point, and take me out at this level. Now, if you look at this particular one, so you have to enter at this point and take me out at this high level. Now, remember, a swing trader, this is a 4 hours chart, right? So that means every candle is a 4 hour candle. So let's start counting. 4 hours, 8 hours, 12 hours, 16 hours, 20 hours, 24 hours. So it took 24 hours, that is a day, for a swing trader to go from their entry to their profit. So what's the difference between all of these traders? They are all trading the same market, just that they have different time, what's the word? Time, uh, Different times they enter the trade and get out of the trade. To better put, let me explain it that simple, right? They have different time. A scalper can enter a trade and get out and already is already in profit in the next 5 minutes. A day trader can enter a trade, and maybe in the next 1, 2, 3, 4 hours, he's already out of the trade and gotten to his destination. A swing trader can enter a trade and in the next 1 day, 2 days, 3 days, it can take them that long to get to their destination. So it's just a question of time, right? So swing traders are more relaxed traders. They enter a trade 3 days after they come and check their trade. Okay, it has gotten to their destination. They are good. For day traders, few hours, they have gotten to their destination. For scalpers, 5 minutes, 10 minutes, they have gotten to their destination. Which of these trading style is better? There's no hierarchy to it. It just depends on your trading style. On your trading style. Are we together now? Depends on your trading style and which one best suits your kind of person. There are people that they like fast profit, quick one. Let's enter and come out. There's our scalpers. There are people that okay, let's take 1, 2, 3, 4 hours, more relaxed, more self-paced to enter the trade and come out. Those are day traders. Swing traders, there are people that they don't have so much time. Maybe they are busy and all of that. They enter a trade, go about their business. After like 3 days, they will come back. Okay, the trade has gotten to their destination. So, like I said, it depends on the kind of person that is trading the market. So there's no preference, there's no hierarchy, there's no one that is better than the other, right? There are scalpers that are making massive profits in the market. There are day traders that are making a lot of money from the market. And there are swing traders that are making billions of money or billions of dollars from the same market. Are we together? Are we together?
Yes, we are.
Yes, sir.
Yes, we are together, together.
All right, all right. So that's that for the different kind of traders. I believe you are noting these things. So please let's write them down so that we can, you know, have them at the back of our minds. So that's that for, the toolbars that we'll be using, at least for now. There are other parts that I would like to explore, but let's leave that for later. Subsequent live classes, we'll get into those parts. So yeah, now to the tools. I said we're going to be exploring some of the tools that we'll be using to trade the Forex market. Now, like I said, TradingView, which is what we are on right now, is for live analysis of the market. All right, real time live analysis of the market. You see what the market is doing in real time. All right, so this is gold, XAUUSD. You see what the market is doing in real time. Now, remember that I told you that there was a news that was going to come out on every first Friday of the month, and it is always a fundamental news. It came out today at 1:30 p.m. earlier today, and you can see that, of course, market was doing our regular up down trend, and when it was 1:30, the news came out, and then we had this spike to the upside. So that's a fundamental news. Remember from our last class, talked about technical, fundamental, and sentimental analysis. So that's just to show you that that played out earlier today. And personally, I don't trade the news, but for those that did, they made, they made a lot of money. And for those that it went against them, they also lost a lot of money. So whichever one or whichever side of the coin they fell, anyone is fine. But personally, I don't trade fundamental news because it is not reliable and you never know where the market is going to head to. So back to what I was saying, we have TradingView for live analysis of the market. The second one that we are going to be needing to trade is MetaTrader 5, MT5, like we call it, MT5. For those of you that are already traders or you've traded before, you know that you are familiar with some of these tools. MetaTrader 5. So there's the 4 and there's the 5. Of course, 5 is the advanced, updated version of 4. So nobody wants to be using outdated applications. So we go for MetaTrader 5. MetaTrader 5, simply put, is more like your bank application. All right. Your bank application, you want to make transfers, you want to recharge, you want to do airtime, you want to do data, you log into your bank app, right? So that's exactly what MetaTrader 5 is for. So you want to place a trade, you want to enter the trade, you want to execute on your trade, you want to buy, you want to sell. You've seen a setup, you've analyzed the market, and the market is telling you buy. You cannot buy here on TradingView. You will need to get MetaTrader 5 to go and buy and to go and sell the market. Are we together now? So it's more like your bank application, GTB, UBA, all of those bank applications. So you want to do any online execution on the market, you are going to be needing MetaTrader 5 to, you know, to execute on those trades. So after you have done all your analysis, let me go back to my charts that I was showing you earlier that I took on gold. Now, after I did all my analysis and I was sure that okay, market was going to buy, I couldn't buy here on TradingView, right? So I had to go and download MetaTrader 5. I can get it both on Play Store and Apple Store. You can download it tonight after the class. So MetaTrader 5, and it's on that MetaTrader 5 that I'm going to now press buy, and then it's going to buy in my direction, right? Because I'm asking it to buy. So that's that. And then the last one, or the third one, not the last one now, the third one that we are going to be using for our trading is a broker. We'll be needing a broker for our trading. So a broker, better explained, is like your bank, right? Your broker is like your bank. Your bank keeps your money. Yes or no? Right? Your bank keeps your money. So if you go to the bank and you deposit, maybe you put $100 in your bank, your where is your $100 going to be? It's going to be with the bank. It's going to be with the broker, right? And there are a lot of brokers because this is the thing. Like I said, TradingView is for market analysis, live real-time market analysis. MetaTrader 5 is your bank application where you can send funds. I mean, where you can execute trades, you can buy, you can sell, you can take action on the MetaTrader 5. Whereas the broker is your bank. So, say for instance, now the GTB bank, the UBA bank, these are the places that keep your money. These are the people or agencies that keep your money. Any other bank that you know, right? These are the agencies that keep your money. So if I want to deposit $100 now, so say I have $100 to trade the Forex market, who am I going to deposit it with? I'm going to deposit it with the broker. So I'm going to deposit my $100 with the broker, right? Now, after I've deposited my $100 to the broker, I'll now download my bank app so that anytime I want to transfer or execute or do airtime or do data, I'm going to be using my bank app instead of going to the bank every day to buy data, to withdraw, to whatever. I'm going to download my bank app. So I'm trying to make it relatable so that we can get it once and for all. All right. So I'm going to download my bank app to make transactions easily. Right. And like I said, for you to know what you're going to do in the market, you would need TradingView to analyze the market. I believe that's very simple. I mean, that's simple enough for us to grab. So when I have my capital, I give it to the broker. Now, for me to be able to transfer money from the broker, I would have to link the broker to my bank app. Are we together now? I would have to link the broker to my bank app. I'd have to link it together. Remember, if you download GTB, you would have to log in your bank details and all of those things so that your account will be reflecting in MT5, right? Or your GTB bank details or GTB bank, whatever how much you have on it is going to be reflecting on your bank account or your bank app. So the same thing with broker and MT5 too. I give my money to GTB bank. I go and download GTB bank app. I link GTB bank app to the GTB bank with the details so that I can see how much I have in my account. And if I want to do airtime, do data, do da, I can easily do that on the app instead of going to the bank. So same thing with this one. I give the broker my money. I download MT5, which is the bank app, so to say. I link the bank app with the broker. So if I have $1,000 in my account, in my bank rather, I'm going to see the $1,000 reflect in my MT5 once it is linked together. Any question? Any question? Any question? Any question? So far, any question?
No question.
Okay, so I believe that was simple enough. So that is those are the three tools or three apps that you are going to be using. There are many other apps that you'll be using anyway, but these are like the three basic fundamental apps that you're going to be using on your trading journey. And you are going to be needing these three for a very, very, very long time. A very, very, very long time. All right. So what I want you to do now is I want you to go and open an account with a bank. I'm going to be giving um a link. Probably I'll be dropping the link later on the group. So there are a lot of different banks that exist on the on the forex market. A lot of banks. Definitely not your GTB or UBA. Some of it we have Exness. I mean, some of you must have heard of them. Octa FX, Access Market. Just mentioning a few that's coming to my head right now. Access Market, HFX. All right, there's 10 Trade, Wheels Market, Willis Market, and a million others. All right, a million others. So these are like your bank, what's it called? Your banks, right? These are your banks. But just that they don't have physical offices, they have online offices. Of course, they have physical offices in their different locations where they are situated. But just to put, they have online offices where you can go online, create an account with them, send your money, they deposit your money into your account, they create an account for you, and then you have an account with them. Now, MetaTrader 5 is the bank app for all of the banks that we have here. Because this is the only place, or this is the most popular place where you can execute your trades. So if I create an account on Exness, I'll go to MT5, which is my bank app, and I'll link MT5 to Exness. If I probably created an account on OctaFX, I'll go to MT5 and link MT5 to OctaFX. Same thing for every other ones, right? And then once I link it together, my money that is in my bank will reflect on my MT5, and I can see it in real time, how much I deposited and how much the exact amount is going to reflect on my MT5. So that when I want to buy, I will be buying on MT5. When I want to sell, I'll be selling on MT5. And then TradingView, definitely, that's what we've been doing analysis on since the last class or since morning. So that will be that for tonight's lesson. I believe we've covered a lot tonight. Thankfully, it was recorded, so you can go over it again. Probably you missed any part of any part of the discussion or the conversation. You can go over it again. Thanks to Mr. Tokwe, give us access to his Google Meets where we can record. So yeah, that's that for that. Any questions so far? This is just over 1 hour. We started a bit late. That's why we are ending 9:31. Started a bit late, just over an hour. So any question, maybe from the lessons that you've been taking, or the lesson 1, lesson 2? Are there any
Um,
questions that you had?
no, I don't know if you can drop the question on the group maybe later on because for the second class I'm not really available, so I have to watch the recorded video. And I have any question, can I drop it on the group?
All right, yeah, that's fine. Although I wouldn't want us to maybe
Okay, thank you
spam
so
the
much,
group,
sir.
but let's just start with that. Let's see how that goes. You can just drop your
Uh,
questions on the group. Any other
okay.
question before we call it a night? And for those who have not followed the page, I sent the links to the page. As much as, I mean, of course, it's going to add a bit of followership for me. Many of the content I'm going to be putting out on these pages are tailored to beginners or beginner traders or intermediate traders. So you'll be doing yourself a lot of good following the page and engaging with those content. All right. So that, I mean, like I said, it is 80% psychology. All of these things that we have been talking about since morning, trend, the tools, the different banks, MT5, TradingView, this is just 20% of the Forex market, right? There are a lot of people that know all of these terminologies and English, and they are still losing. So it is not about English. It's not about the terminologies alone, right? It is mindset. And those are part of the content I've been putting out. You've been on the group too. I've been putting out some of those videos on the group. So if you do yourself a lot of good by following the link to those pages and engaging with the content, listening to the content, and if you have questions, you can always drop in the comments. I'll do what to answer them, especially on YouTube. I'll be rolling out some content on YouTube very, very, very soon. So you want to subscribe and stay tuned for that. So in the absence of any other question, I think we've covered a lot for today, for tonight. Once the video drops, I'll share the link with us on the group or probably on the website, right? So for those who have not submitted their task, the task two, you have till midnight to do that. You have till midnight to do that. What's funny is everybody filled the form before joining the group or before signing up for this training. But as you can see for yourself, some people are already dropping off by themselves. All right. So, I mean, like I said, the requirements for getting on board. This is a skill, right? This is a business skill on its own. So it's not something that if you are lazy about knowledge, then you're not supposed to be here, right? If you are lazy to learn, but like I said, my emphasis to this is that if you don't learn it now, you will pay to learn it later. And it's not like you will pay anybody. The market will deal with you for not knowing it. So if I'm giving you a task to go over something, write a summary of it and all of that, I know what I'm talking about. Because if you don't know it and you think, okay, yeah, I can trade the market, if you put your money will go for vanishing and you will not be able to hold anybody responsible. It's because you never learned. And the market will always deal with you for your knowledge gap. So every of the information or task or lessons I'm dropping on the group, they are very, very intentional lessons. I mean, I'm not just posting random videos. These are videos I've gone over and over again, over and over again. So if I'm giving you to watch, I know why I'm giving you to watch them. Because by the time when these informations now matter, I hope that you would have a knowledge bank from where you can draw from. So these tasks are very, very, very important. Like I said, some people are going to be removed from the group this weekend, and that's for every other person to brace up. It's a very, very easy a 1 month intensive training. And like I said, it's free, but the fact that it is free doesn't mean I will tolerate anything, right? It's going to be as what's the word now? As detailed and engaging, like you paid hundreds of dollars for this. I know trainings that don't even care. They just give you lessons and they leave you to go and handle it. Paid trainings, right? I've paid for a number of them, so I know what I'm talking about. So the fact that this is free does not mean that we can just take it for granted. If you can't keep up, then be my guest. But if you can, trust me, if you can follow through for these 30 days, you're going to come out 100 times better than you came in. 100 times better than you came in. All right. So that's that for that. Thank you very much for joining tonight. We'll see again next week. Our live classes, Wednesdays and Fridays. And every other day, we'll be dropping lessons on the website. Have a wonderful night rest. Good night, everyone.
So,
Good night.
good night.